Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey everybody, welcome back to the show. Today we are joined by Larry Pendleton. So his mission is to help people achieve financial independence through passive income and tax saving strategies. You're not going to want to miss this one. Larry, my friend, welcome to the show. I know you and I were just chatting offline before I just pushed record, but why don't you just introduce to the audience, who you are, man, your journey, how you got here and what you got going on.
I appreciate it, Kristen. Yeah, Larry Pendleton, the investor CPA, based out of Norfolk, Virginia, so Southeast Virginia, for those familiar with the with that area of the state. Yes, as you mentioned before, my mission is to help people achieve financial freedom by building passive income through real estate and saving on taxes. We leverage a lot of different strategies within the code itself, primarily for real estate investors, but we find opportunities for everyone to take advantage of those opportunities as well.
That's awesome. That's awesome. So Larry, what inspired you to focus and give you the drive to help people achieve, financial freedom through passive income? Was that something you just learned by obviously being in the business yourself, or what kind of gave you that drive to help other people?
Probably the first half of my CPA career. I've been a CPA for nearly 2 decades now. Always knew the benefits of real estate when it comes to tax savings, and then about halfway in, I was just kind of your standard CPA filing taxes, not really adding any value, and people really was kind of pushing for that. And as I tell people, the CPA exam is just a test. It doesn't teach like really the true strategies and stuff. So I had to really make a pivot in my life and in my business to how I'm really going to be of value to people, and really self-educate myself on how the IRS code does really benefit big business owners and investors, and then applying that to building cash flow for myself, and then kind of realizes that a lot of us aren't living in our purpose because we just got these W-2 jobs just to pay the check. But it's like, if we have additional stream of income coming in, we may be able to kind of really serve a bigger purpose in life. So I want to help people achieve that goal for themselves.
I love that. I love that. So let's talk about maybe what are some of the most effective passive income strategies, you're utilizing, and you show other people how to utilize as well.
Yeah, so I think a lot of people hear about just joining to a syndication or a fund, where it's group economics at that point.
Yeah.
You're compiling resources, you're working with a general partner or a syndicator who's going to be operating the asset itself, and you may get some losses year one, year two from a tax perspective, but you're expecting that to producing some type of cash flow for you down the road. And
Mm.
depending on how long they keep it, maybe 2 years and maybe 10 years, they may do a sale or cash out refi, so you get your seed back, and be able to reinvest the funds that way. So that's one way to do it from a passive standpoint, if you're not really into acquiring the properties yourself, and doing being a landlord, because it's a
Yeah.
whole other animal when you're having it manage it yourself. You also could be a private lender. We work with a lot of private lenders in our new construction side of things, where like you're the primary, or you may be in second position, but you may be first or second, depending on how much capital is in and how many other investors are involved. But it should be no more than like one or two first and second positions that you're funding the deal. You may be working with a flipper, you may be working with a builder, you may be working with a rental property holder, and they plan on doing the cash out refi to pay you out that way. But your goal is, hey, maybe in this for 6 months to 18 months and getting cash flow or getting paid out at the end along with your principal and interest. So making sure the proper terms are in place there to protect you and make sure you got your attorneys involved with stuff like that. Or if you really want to be passive and not really have to worry about the management of anything, mortgage notes is a solid arena to be in as well, where you maybe most likely be working for a broker or someone who has mortgage notes from other people. They could be performing, they could be non-performing, but it's an opportunity to be the bank at that point, and buy someone's mortgage at a discount and build the cash flow that way. So those are some of the ways that you can invest in the real estate, have cash flow coming in, but it's secured by a tangible asset, which is the key piece there. If something goes wrong, you can go after whoever at that point with your attorney, and be able to collect the asset from there if you're not getting paid what you agreed upon.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
That definitely, I love that. So let's talk about maybe some, the biggest, tax mistakes that people are doing right now. Maybe also not even just mistakes. People just obviously don't know this. They don't teach you this in school, right? So let's just talk about, do people just not have the education on it? Not the resources available, or, what are some mistakes that you're seeing people that are doing when it comes to, their taxes or not taking advantage of certain things?
And the primary thing is the education of it.
Mm,
I'd like to tell people to be straight up and honest with them. The tax code is not made for employees. Even if you are, I know people read Robert Kiyosaki in the cash flow quadrant, whereas employee, self-employed, big business, and investor. Yes, the cash flow flows that way, but the tax savings are on that side as well, because the government wants to incentivize those things to help grow the economy. Like the government relies on big businesses to provide jobs, and they rely on investors to provide housing and so forth. So
mm,
that's why they get all the tax breaks. Is that's how the game has been since the since the very beginning. Nothing that's been created recently, as some people may think, but like that's been the rules of engagement. So if that understanding of your biggest tax burden is going to be that high paying W-2, and if you have both spouses, if it's two spouses in the house, like say, and neither one is able to be real estate professional, then like that's going to create an issue. So you can be acquiring assets but
mhm,
not really seeing any tax savings because you're still trying to phase out of your W-2, and that's the transitional piece that's not really explained properly, is that you're going to go
mm,
through the transitional period of making income, and not really seeing any tax benefits other than not being taxed on the rental income or other investment income that you got coming in because you're still working these high paying W-2. So it's understanding that is okay, we got to keep building the assets, keep building cash flow to potentially replace that W-2 income.
mm,
Especially for those who are real estate agents or brokers or flippers or new construction sellers, where like a lot of them are still reporting all this stuff on their schedule C. That's the biggest mistake I'm seeing nowadays, is that okay, if
mm.
you're generating active income and you're over a certain amount, it's time to be an S-Corp at that point. Yes,
Oh,
requires a separate tax filing, it requires payroll, but if you're not aware of that, then I say you're not able to make the assessment of if that's the right route for you at that
Mm.
point. So outside of the education and knowledge, is that the base of it, and then okay, here are certain strategies, or when is the right time to do a cost segregation study for
Mm.
your rental property and claim bonus depreciation. Like it may not make sense all the time, but it's really investing into yourself and the team around you to make those type of determinations.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
No, I could not agree more. And this is why it is so important to obviously, work with somebody such as yourself that has the know-how, has the knowledge, on this, so they can help you avoid these mistakes, right? Because you see it day and day, right, man?
Yeah.
I mean, a lot of people, they just don't have the resources, and then they get stuck with just thinking, oh, I can just keep going this way, and the next thing you're losing so much of your money, and it's just being tossed out, right? It's for example, it's someone that's just a traditional single family investor that just has everything wrapped inside of an LLC. And next thing you know, you're doing fix and flips, you're doing wholesaling, you're doing novations, and then the tax burden that comes with that, it's pretty hefty, right?
Yeah.
If you're not knowing how to actually pivot in a different direction to where you can save on that. So let's talk about that. I mean, have you worked with people that have, obviously been stuck in that position, right? Single family, stuck doing the wholesale and the fix and flips, and then they're like, hey, I'm giving up 35, 40+% of what I'm making here, and how do you can you walk through like how you set them up differently from that?
Yeah, so and honestly, it could be more. It could be 50, 60%
Yeah, I was gonna
in
say.
some of those cases.
Yeah.
So if we're dealing with flippers, it's like, okay, well, what's your like really assessing the numbers? I tell people if you're netting at least $50,000 a year, we have to have a serious discussion of if that S-Corp election is going to make sense. So there's certain
Mm.
forms that need to be filed to make that election so that LLC is legally still an LLC, but it's electing to be taxed as an S-Corp. Which will require a separate tax filing, and then you're required to pay yourself a reasonable salary. Now, the purpose of the S corp and how it helps saves on taxes, it doesn't help save on income taxes. The big thing that it helps saves on is self-employment taxes or FICA taxes. So when you have your W-2, you split that with your employer. When you're just running a business on your personal tax return, you're responsible for that full 15.3% on top of your income tax. So that's why I say it can get to 50, 60% depending upon how much money you're making
Jeez.
from your main gig or your main W-2s. Okay, well now we got this additional tax that's on top of it, and you yes, you can just write off a whole bunch of stuff and they'll be great, but are you bankable at
Mm.
that point? So we're balancing those two worlds of do we write off everything, or are you trying to set up to get a loan to do other and bigger projects? Because if your business isn't showing income and you
Yeah.
don't have many assets, you're going to be kind of hamstring of what the banks, unless you're going to just raise private money at that point. So it's having those type of conversations with clients to understand that, and kind of get back to the tax savings of it. Is that okay? Once we have it in the S corp and you paying yourself the salary, that 15.3% no longer hits your bottom line. It only hits the
Mm.
salary that you're paying yourself. So to throw numbers in this, if your flipping business was netting $100,000 on your Schedule C on your personal tax return, your minimal tax bill is going to be, or tax liability is going to be, at least $15,000, because that
Oh wow.
15.3% is hitting that bottom line. But with that S corp election, and then you pay yourself whatever, like uh, $30,000 salary per se, that 15.3 is only going to hit the $30,000, which is like I say, you're still paying income tax on that 30,000 and the 70K that the company is netted out, but you save. Then that brings it down to roughly about four or $5,000, somewhere in that range. So like we're talking about like nine, ten
Man.
thousand dollars in tax savings just by making a certain entity election. I say it, and that it costs you probably a couple $100 to make that election, and then the actual tax filing that may be a couple of thousand, but you want to ensure that the tax savings outweigh those costs, and that you're talking to someone who's just not selling you something. They're actually going to walk you through on when is the
Mm.
right time to pull that trigger.
Yeah, and something you just touched on right there, right? It has to be the right time because you see there's so much out there right now to where it's like you're not in the position, right, to make that switch yet, right? And it's just not ethical, right? So you have to really figure out, with working with somebody that obviously clearly knows what they're doing, it's going to set you up for success and not derail you, you know?
Okay.
So everything you just said, you just hit it on the head, my friend. Let's talk about, 1031 exchanges. I
Mhm.
for those that don't know what a 1031 exchange, could you explain maybe, what that is? Is that something you assist, your clients and your people with as well? And when is the best time to utilize a 1031?
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Yeah, so we do work with our clients on that. So if you have what's called an investment property, so if you're flipping a house, that doesn't apply for this. We're talking about true rentals or just land you just been sitting on for a few years. It's called a light kind exchange, where like you sell that property and then you roll those gains into the acquisition of another property.
Mm.
That does involve getting a 1031 intermediary or a qualified intermediary in place for that, because you as the owner, you cannot touch those funds. That blows up the whole 1031 strategy. So okay, you're proverbially kicking the can down the road of, okay, we're just going to roll these gains into this property over here and then keep cash flowing from there. A morbid way of looking at it, sometimes we call you swap till you drop. Like you just keep
Yeah.
keep 1031 and keep trading up, and then you pass away and your heirs get the benefit of the step up basis, which we could talk about a different time. But with 1031 exchanges, you want to ensure that whatever property that you're acquiring is at equal or greater value of what you're going to be selling.
Mm.
Typically, we say go greater value, just to be safe on that end, and it doesn't have to be one property. It can be multiple properties that you can acquire. You can wrap in multiple properties in your sale into a 1031. There's multiple ways to do it, whether it's before you sell or after sell it. But it's just getting an understanding of working with that 1031 QI of what your options are. In a lot of cases, a lot of people who have rental properties who won't able to use the losses because they have high paying W-2s. They got built up losses along the way that is kind of suspended and rolled forward in the future years. A
Mhm.
1031 may not make sense if you have enough losses from previous years to offset the gains with the sale of the property, including depreciation recapture. So it's like, okay, making sure that your tax return is being fully assessed to know whether or not can we just do this without paying someone whatever a couple of $1,000s to hold the funds for a certain period of time until you find another property. And you do have that it's a total of 6 month period. The first 35 days you gotta have the properties identified if you're gonna do a 1031, and you gotta close on them with 145 days,
Mm.
which could create some issues, especially if you want to do some real due diligence or you get into bigger properties and apartments that will require like more walkthrough and
Yep.
more time for lenders. So just being mindful of the timelines that's involved with it. If you have other losses that could be involved, or could you do a poor man's 1031 exchange where like you don't do the normal route, you buy another property, you do a cost segregation study and use those losses to offset the
Mm.
property that you just sold. So it's like once again, that's just kind of a big picture of what a 1031 exchange is, the different options with it, and then like I say, if when does it make sense or not.
No, it's awesome, man. Yeah, it's such valuable information. There's a lot of people that really just, again, don't know the ins and outs of that, right? So by you sharing that, it's huge value. So, what would you say was one of the most overlooked tax deductions that people just are not using that you're working with right now with your clients as well?
I think people aren't taking the opportunity to really wrap their kids into the business, people ask like, "Was there's an age limit or anything like that?" It's like there's not really an age limit. It's just does the work make sense is it age appropriate for that
Mm,
child? And is it good, especially if you have rental properties. I know it's a touchy subject at times for some clients.
yeah.
Like, yeah, if you got a 2 year old, a 1 year old, the best you can do is marketing. And if you're going to market your properties out there and put the kids in the pictures and all of that, so okay, cool. You can do some type of marketing agreement from there as they get older, or they may help with office cleanup or property cleanup, and they may even get involved with social media and actually posting stuff for you. So it's a good opportunity to actually get the kids involved in the business sooner while they're
Mm,
young and early and get them engaged while being able to pay them up to the state standard deduction or the federal standard deduction without them having to file taxes as well. So it's once again, as long as they're working for just mommy and daddy's business, there's a
mm.
way for them to get paid, not to file taxes, but you still get the tax benefit as well. So that's one I see overlooked quite a bit because people are not sure or just don't want to get their kids involved in business that type of way.
Right, right, right. That definitely makes a lot of sense, Larry. If you guys haven't realized by now, Larry's dropping $1 million worth of game. So hope everyone's paying attention. Cool, man. I'm assuming, correct me if I'm wrong here, do you help structure estate planning and also assist with setting up trusts as well? Is that
Yeah,
something that
so
you help with?
we work with our clients' attorneys.
Mm,
If they're going to do trust, most of the time is revocable living trust that we're helping our clients and their attorneys set up to make sure they're fully aware of the tax implications on our end, while the attorney makes sure all the legal stuff is in order.
very cool, very cool. Yeah, I just wanted to ask, the best way is how you're helping, structure that as well, because, there's a lot of people that think that even when you do have stuff set up like that, I mean, you got to make sure you're doing it correctly, right? Because people think, you're safe completely from that, right? So in your experience, do
Yeah.
you even feel like even with having an actual trust, is it untouchable? Like people will say it is untouchable, or how does that work in your experience?
Yeah,
Yeah.
and it's funny. I just had a conversation with a client
Mhm.
this past week because they got it all set up. They got it set up without me, and then
Oof.
they thought that they'll be shielded from all taxes. Like you just got a revocable trust. Like tax wise, it's just a disregarded entity.
Mm,
Like I said, all the activity that's owned under the trust is still going to flow through to your personal tax return. It doesn't help save you from taxes.
mm,
You're not this special entity is exempt for that. I think that there's
yeah.
this misconception that like these trusts make you exempt from taxes. Like that's not the case. As I was explaining to him, I think he was talking about more so like irrevocable trust, which
Ah.
you really don't want when you're alive because once that's set, it's very difficult to maneuver, and move stuff in and out of that trust. So typically people have a revocable trust while they're alive, and when they pass, it converts into irrevocable, so it can't be adjusted after their passing, and it's aligned with their will. Plus, irrevocable trusts are still subject to taxes. So even though like you an individual in an irrevocable trust may not be taxed. Your irrevocable is paying taxes sometimes even much more than what's on your personal tax return,
Oof.
and then you have to find ways to fund it because they can still come through. The IRS can still come through and collection from anybody that's involved or anything that's within the trust itself. So that's why you want to make sure that no one's selling you a whole bunch of tax benefits of a trust when it's not fully shielding you from that perspective. It's primarily an asset protection and anonymity play, which is very important. But then it's okay, how do we align actual tax strategies to mitigate your tax liability that reduces your tax on your personal tax return?
Oh man, Larry, I'm so glad you're mentioning this because this is what we need. We need the real meat and potatoes, right, on what's actually the truth, right? Because as you know it, I mean, a lot of stuff you'll see on Instagram, YouTube, and they'll paint the picture and this dream that this is that, and this is the holy grail, and that's simply just not the case. You have to be educated on this stuff. So I appreciate
Exactly.
you being authentic, my friend.
That's all
Awesome,
I can
man.
do.
That's it. That's it. I wish, honestly, man, I wish we had more time because there's a bunch of more questions that I do want to ask you, Larry. But fortunately, we don't. So I just want to give it back to you, my friend, and just where can the audience find you, man? How can they work with you? Where do they need to go?
Yeah, they can go to my page, theinvestorcpa.com. I'm also on Instagram, Facebook, LinkedIn as Larry Pendleton CPA. But yeah, people can see different webinars and investments that we're into, and happy to connect and serve where we can.
Awesome. Awesome. We will definitely drop those links in our description on our YouTube, Larry, so people know where to go. So, guys, be sure to reach out to Larry and hit him up. So, but Larry, my friend, it's a pleasure having you on, my friend. Again, I'd love to have you back on here in the future because there is some more questions I would love to dive in with you and discuss on this because this is such an important topic. I really do feel like in this industry. So, we'd love to set that up, man. We'll connect. But pleasure
Definitely.
having you on, my friend. Thank you.
Appreciate it. Thank you.
Awesome. Awesome. Well, guys, hope you enjoyed today's show as much as I did and got a ton of value. I know you did because I did. But as anyways, we will see you on the next episode, my friends. Take care.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.